The world is holding its breath tonight. Tension is thick in the air as people everywhere tune in to breaking news, trying to make sense of a rapidly changing situation. From bustling city centers to quiet living rooms, the uncertainty is palpable. A sudden U.S. military operation against Iran has ignited fears of a wider conflict and sent financial markets into turmoil. Investors are scrambling, and the world's major stock exchanges are reacting with sharp declines, reflecting the anxiety gripping global economies. In the early hours of June 22, 2025, American stealth bombers targeted key Iranian nuclear facilities, a move former President Trump called necessary to neutralize a threat. The operation was swift and precise, but its consequences are already rippling far beyond the region. But this strike has shattered a fragile peace, provoked a furious response from Tehran, and sent oil prices soaring. Across Iran, protests have erupted, and the world is bracing for what might come next as diplomatic channels scramble to contain the fallout. Iran's threats of retaliation, especially given its control of the Strait of Hormuz, have global markets on edge. The strategic waterway is vital for the world's oil supply, and any disruption could have far-reaching consequences for energy security and global trade. The price of Brent crude oil jumped nearly 7%, signaling deep anxiety about potential supply disruptions. Energy companies and governments alike are now reassessing their strategies, preparing for possible shortages and further price shocks. Tonight, we break down the military operation, the fierce reactions, and the economic chaos already unfolding. We'll examine how leaders are responding, what this means for ordinary people, and what the world might expect in the days ahead. The stakes could not be higher. As the world watches, the next moves by both Washington and Tehran could shape the future of global security and stability for years to come. In the early hours before dawn, the U.S. military launched a series of highly coordinated airstrikes targeting Iran's most critical nuclear facilities, Fordow, Natanz, and Isfahan. The operation was the result of months of intelligence gathering and planning, aiming to cripple Iran's nuclear capabilities in a single, decisive blow. Using advanced B-2 stealth bombers and a barrage of cruise missiles, the U.S. sought to overwhelm Iranian air defenses and ensure maximum destruction of the targeted sites. The strikes were executed with precision, leaving little time for Iran to react. Former President Trump, flanked by Vice President Vance and Secretary of State Rubio, addressed the nation just hours after the attack. He declared the mission a resounding military success, claiming that Iran's uranium enrichment program had been obliterated and that the world was now safer as a result. The Trump administration framed the strike as a necessary and preemptive move to prevent Iran from developing nuclear weapons, assertions that Tehran immediately and vehemently denied. U.S. officials insisted that the action was taken only after all diplomatic options had been exhausted. Iran's response was immediate and furious. Iranian leaders condemned the attack as an act of war, vowing swift and forceful retaliation. Massive protests erupted in Tehran, and the government called for an emergency meeting of the United Nations Security Council to address what it called blatant aggression. The Islamic Revolutionary Guard Corps, or IRGC, issued a stark warning, threatening direct attacks on U.S. military forces in the region and hinting at the possibility of closing the vital Strait of Hormuz, a move that could disrupt global oil supplies. Israel, having been informed in advance of the U.S. operation, launched its own strikes in response to Iranian missile fire. Meanwhile, leaders from across the Middle East and beyond called for restraint, warning that further escalation could plunge the entire region into chaos. With over 40,000 U.S. troops now placed on high alert and military assets rapidly deployed throughout the region, the Middle East stands on the brink of a potentially devastating conflict. Tensions are at their highest point in years. As the world watches anxiously, the question remains: can diplomacy and international pressure prevent a wider war, or is the region destined for further violence? The airstrikes sent oil prices surging overnight, a classic market reaction to Middle East instability. The Strait of Hormuz, a narrow waterway between Iran and the Arabian Peninsula, is the world's most critical oil choke point, with 20% of global oil passing through daily. Iran's threats to disrupt or close the strait could trigger a catastrophic energy crisis. Even the risk of attacks or higher insurance costs for tankers can bottleneck supply and send prices higher. Analysts warn oil could hit $110 or more if conflict escalates, risking a global recession. The market's reaction is a rational response to the fear of disrupted shipping lanes and prolonged conflict. The world is now paying a premium for uncertainty. In every crisis, there are winners and losers. Major energy companies and defense contractors saw their stock prices surge, while investors flocked to safe havens like gold and Bitcoin. Airlines and shipping companies, hit by soaring fuel costs, face financial pain, costs that will be passed on to consumers. For everyday people, higher oil means more expensive gas, groceries and goods, squeezing household budgets. Inflation will ripple through the economy, reducing purchasing power for all. Global stock markets fell, reflecting fears of recession and disrupted trade. Those who sell oil and weapons benefit. Everyone else pays the price. The interconnected global economy means no one is immune. The oil shock has upended the Federal Reserve's plans to cut interest rates. Surging energy costs threaten to reignite inflation, forcing the Fed to reconsider its strategy. If the Fed cuts rates, it risks fueling inflation. If it holds or raises them, it could stall growth and trigger recession. This is classic stagflation risk, stagnant growth and high inflation. The Fed's tools can't fix supply shocks like an oil crisis. Financial markets are already volatile with borrowing costs rising. The Fed is likely to wait and watch, but its path to lower rates is now blocked by global turmoil. Every American's financial well-being hangs in the balance. This conflict has the potential to draw in numerous nations, each with their own interests and alliances, further destabilizing an already volatile region. The stakes are high, and the world is holding its breath as tensions escalate. Israel, having received intelligence in advance, has already responded with swift and forceful retaliatory strikes following Iranian attacks. The country's military is on high alert, bracing for further escalation and preparing for the possibility of a prolonged conflict. Saudi Arabia, whose economy is deeply tied to the steady flow of oil through the Gulf, now faces direct threats to both its economic stability and national security. Any disruption to oil exports could have ripple effects across the global energy market. China, as the world's largest importer of oil, finds itself caught in the crossfire. With its energy security at risk, Beijing may be compelled to take a more active diplomatic role, seeking to mediate and protect its vital interests in the region. The Middle East serves as a crucial crossroads for global trade. Any threats to shipping routes in the Red Sea and Suez Canal could disrupt supply chains worldwide, affecting everything from fuel prices to the delivery of everyday goods. Houthi militias, closely allied with Iran, have openly threatened U.S. and allied ships, raising the risk of a wider maritime conflict. The presence of international naval forces underscores the seriousness of the threat to global shipping. With so many military forces on high alert and tensions running high, even a single miscalculation or misunderstanding could trigger a devastating and far-reaching war, the consequences of which would be felt around the globe. As the crisis unfolds, the world is watching anxiously, hoping that diplomacy and dialogue can prevail to contain the situation and prevent a wider catastrophe. In uncertain times, information is power. Watch oil prices. If Brent crude stays above $100, expect higher gas and inflation. Listen to leaders' rhetoric. Calls for diplomacy are good, threats to close the Strait of Hormuz are not. Investors should stay diversified and avoid panic moves. Review exposure to vulnerable sectors. For households, prepare for higher costs and focus on financial resilience, emergency funds, budgeting, and debt management. This crisis is a reminder of our interconnected world and the importance of being prepared. Stay informed, stay calm, and be ready for turbulence ahead.